I recently did a video on my top 5 stocks to buy now through the end of the year. 2 of my picks reported earnings within days after that video, and so I want to see how they did and if their performance matches up with my recommendation. The first stock was Health Equity, and it released earnings on June 3rd, and they were beautiful. This is my brand new stock I am very bullish on and taking a big bet on, and they are delivering. How did I pick this stock? Well, by following my quality checklist and having some knowledge in the business. I did a big video when I first bought this stock, and now seeing that my bullish thesis is being backed up by strong earnings is adding to my high conviction of my investment in this company. In a quick summary, Health Equity is a financial, technology, and business services company that is designated as a non-bank health savings trustee by the IRS. This designation allows Health Equity to be the custodian of health savings accounts regardless of which financial institution the funds are deposited with, and they administer 16 million accounts, with the majority of those being health savings accounts. They work with employers, benefits advisors, and health and retirement plan providers to help customers save for various health-related expenses. Through cutting-edge technological solutions and innovation, they empower individuals to take control of their healthcare journey while ultimately enhancing their overall well-being. So they have a very easy-to-use app where you can save, invest, and spend. They mainly make revenue through fees, and this is creating a beautiful toll booth effect where they simply collect fees as customers utilize its products. So let's go ahead and start looking at their earnings. We're going to start with some highlights. Revenue came in at a record $287.6 million. That's an increase of 18% year over year. That is great growth to see in this company's revenue. Net income went up from $4.1 million to $28.8 million. What a jump. Love to see that. And then adjusted EBITDA came in at $117.4 million, which is an increase of 36% compared to $86.6 million last year. Now they hold 9.1 million HSA accounts, and that's an increase of 13% year over year. This is the bread and butter of this company. So I do want to see this in double-digit growth range. So anything 10% and above is good. They're on track. If it fell below that, I would be worried. Now their total HSA assets came in at $27.3 billion, which is an increase of 22% year over year. Now, the fact that their assets of these HSAs that people hold in there, so cash and investments, is growing faster than the accounts themselves is beautiful, because what happens when you save money in a savings account, let's say a high yield savings account, in your 401k and your IRA? Well, you're likely to keep it there long term. And this is guaranteeing that Health Equity will just sit back and collect higher and higher fees as time goes on. Makes me so bullish on this company. Now they have a total of 16 million accounts, which includes that 9.1 of health savings accounts. And overall, it's an increase of 7% year over year. Again, the bread and butter is the HSAs. That's what I want to see in the double digit range. So 7% overall is pretty solid. Now, the company did complete its acquisition of the Benefit Wallet HSA portfolio on May 9th, 2024, which we will talk about here in a minute. But let's look at some of these numbers in charts, because charts tell a story. Now, with their revenue, it's growing beautifully quarter after quarter, especially this last quarter. It jumped up pretty nicely. Then if we look at net income, we will see they went from a net loss, and they had a net loss for quite a bit, and then it swung beautifully into the positive, the income side of things, and it's been going up, and up every quarter. That's great to see. It means they're managing their expenses as well. If we look at their long-term debt, we'll see it trailed down and jumped up this last quarter, but that's that acquisition we were talking about. And I loved how they paid down as much as they could before they knew this payment would hit. And I expect this to be going back on the downtrend starting next quarter. Now, the president and CEO, John Kessler, said, "With momentum on both growth and margins, we are raising full year guidance and pushing forward our platform investments to deliver remarkable experiences, deepen partnerships, and drive member outcomes." So did you hear that? They are raising full year guidance. This is so good to hear when you're an investor, that the expectations, they're raising them. Now, if you follow investments at all, you'll know that Salesforce just lowered their guidance, and what happened to their stock? It went down 20%. Investors punished it. This company, a much smaller company, but one I'm very bullish on, is raising their full year guidance, and that is a great thing to hear. HSAs, again, they have the 9.1 million accounts, which is that increase of 13% year over year. That includes 665,000 health savings accounts with investments. That overall was an increase of 20% year over year. So those that are holding these accounts, there was a 20% growth of those investing. And that is so key. Again, when you invest, it's so sticky. You keep those accounts, they're long term. This is proving to be a game changer for their future because that's going to bring in more of those fees, more of those revenues, and they're going to be able to do a heck of a lot with that money and grow this company even more. Now let's talk about that acquisition. In September of 2023, they entered into an agreement to acquire the Benefit Wallet HSA platform from Conduent Business Services, LLC. Pursuant to the purchase agreement, approximately 616,000 HSAs and other accounts and 2.7 billion of HSA assets were transferred from Conduent to Health Equity in 3 separate tranches during the first and second quarters of fiscal 2025 for an aggregate purchase price of $425 million. So that's where you see that debt spike up. But the fact that that was a cost through an acquisition, which I think will add much benefit to them long term because they are the #1 health savings account administrator. And this is just cementing them further. And I think will create a very solid future of us investors not having to worry so much about another player coming in and taking market share. They're doing what they need to do. They're acquiring more. They're growing their market share. That's beautiful. Now, if we look at their stock chart over the last 5 days, we'll see when they reported earnings, their stock jumped up 6%. So it was a very welcome sight from investors, and their stock responded beautifully. And if we take that out to a year, this stock is up almost 45%. So it's performed very well. I do not see that slowing down. This does not mean the stock is overvalued. In fact, I think it's still undervalued. And you'll see here right now, it is labeled a buy. And it does have an upside potential of near 24%. So this shows right here, analysts are also showing that this stock is still undervalued by 24%. So in summary, these were exactly the earnings I was wanting to see as an investor in this company. I truly believe that health savings accounts will grow massively over the next decade due to their triple tax advantage, the ability to save and invest, the option to treat this account as another retirement account once you reach a certain age, and the fact that it is paired with a high deductible plan which charges significantly less in premiums than traditional health plans. The CEO has said that by 2030, they will make HSA accounts more common than 401k accounts, and I believe this and think this will be one heck of a good long-term investment, so I'm betting big on this one, and you'll see it in my portfolio that I will show at the end of this video. Now, the second stock that I want to cover is CrowdStrike, and they released earnings on June 4th. Now, CrowdStrike is a cybersecurity technology company based in Austin, Texas. It provides cloud, workload, and endpoint security, threat intelligence, and cyber attack response services. This was on my list of top 5 stocks to buy now through the end of the year, and they also delivered excellent earnings. So let's take a look at the highlights. Now, first we'll see that revenue grew 33% year over year. Operating margins had 5 percentage points growth. That's up to 22% now. Anything above 20% is really good. And then free cash flows grew a massive 43% year over year. This was really good. Again, that revenue grew 33%, but I want to show that the subscription revenue grew 34%. Subscriptions are such a good, dependable source of revenue for a company. The fact that this is growing at 34% is phenomenal. Then if we look at the operating income, it grew 72% year over year. Again, that subscription growth grew, but so did the profit at 34%. Diluted earnings per share grew at 63% year over year, and free cash flows grew that 42% year over year. I think I might have said 43, but 42%. Beautiful numbers, beautiful growth, and they increased their guidance for fiscal year 2025, just like Health Equity did, and that is a great thing if you're an investor. Now, if we look at the charts, the total revenue, it's growing quarter after quarter like clockwork. This is beautiful. The net income, similarly to Health Equity, went from a loss, so a net loss, to a net income. It swung up. It did go down from last quarter, but it's up massively year over year. And if we look at that long-term debt, it's remaining flat, so really nothing to see here. I'm glad it's not going up, but I'd like to see it going down. And if we look at their stock chart, the last 5 days, we'll see when they reported earnings, their stock popped almost 10%. Now, if we take this out 1 year, it's up a staggering 112.54%. It's been performing excellent, but it's not overvalued. In fact, it's undervalued, and it still is rated a buy and has an upside potential of 30%. So still a lot of room to grow in this stock, and I believe it. So in summary, cybersecurity is something that will only grow in importance, and this company should continue to scoop up market share. And if you don't have any exposure to the cybersecurity industry, then I think this is a great stock for long-term growth. Now we'll look at my portfolio and its performance. I'm up over 19% in total. You'll see there health equity, I'm up 6.88%, and it makes up a large 8% of my portfolio. As far as cybersecurity goes, where I capture that industry, that market, is through Microsoft and Cisco. Now, I do not care for Cisco. I do want to sell out of this someday, but it's going through a little bit of a pullback, so I want to wait till maybe this is back up in the 10 to 20% growth for me before I sell. But if you have any questions on my portfolio, this is something I share with every single video. Be sure to let me know. And if you want to see the other 3 companies I recommended as a buy, be sure to go see my last video. I cover it all. So I appreciate you all and hope you have a great day, and we will see you soon on Mark Arnold's Finance.